Hey everyone, Dan here. We are just before market close on Tuesday, July 13th. Today we're going to take an in-depth look at Clover Health. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also, if you would like to receive a once or twice per week email from me starting in August, I will put a link to a Google form in the description below. You can put your email there. And then when I am all set to launch the newsletter, I'll send a note to everyone who's on the list and say, hey, here's what it's going to be. Here's when it's going to start. If you're no longer interested, no worries. Here's how you can opt out. But obviously, I'll have supplemental info from the videos. I'll have additional trade ideas, setups that I see that I just don't have time to make videos for. And I'll share those in the newsletter. All right. So Clover Health, let me sort of give you a summary, sort of like a table of contents of what we're going to cover today. So one, we're going to do a quick catch up on the chart here, look at some key levels, and then I'm going to do two things. I'm going to put my price targets based on the chart. I will give those to you and sort of the reasons why. And then I'm going to flip over to the business side of Clover and give you sort of like my breakdown of where I think the price should go based on the business and the sector in which it's in based on the competition. So it's going to be sort of like price target based on the chart and the short interest. I think I forgot to mention that. So that'll be part one. And then part two will be sort of like where I think it would land for sort of like an investment kind of thing. So like trading in the first half and investment in the second half, if that makes sense. So I cleared the chart here on Clover Health because I thought it could sort of like do a bit of a reset would make sense at this point. I mean, given the fact of this like near complete retracement of this run up, I wanted to kind of get some levels and see where we are. So I'm actually going to pull up the fib and I'm going to go to this previous price floor before it made this first impulsive move up that then consolidated and then kicked off that enormous wave up. So I'm going to take this price here. So we're going to go from 761 up to the 2885 and grab ourselves some levels there. So here we see holding up pretty well, bouncing around a bunch between the 618 and the 50, which we see a lot on these stocks that had really big run-ups, then have retraced back down, trying to stick itself to the 786 and try some brief impulsive moves there, but just unable to get anything going, and doing, staring down the barrel of, I guess is a way to say, a full retracement here at 100% back down to 761. So, on the sort of like downside of things, my price targets on Clove for sort of like the bearish side would be at a low of about 710. Let's see what our ATR is kicking in at right now. So 761, if I were to take away 43 cents, okay, yeah, so it about makes sense. It lands it pretty well in this sort of like previous price floor / resistance zone right around 710-ish. So that's what I'm going to put my price target to the low end. Don't freak out if you're bullish on Clove and want to know I'm also going to put an upper price target. And again, I'm going to put two upper price targets. One is just going to be basically, if it's able to work itself back up with the chart. And then the other is going to be if we get a short squeeze. So take that into account as well. All right. So there's where we are on that sort of thing. And then, I would look for, let me pull out a little bit here, grab the 6-month chart and see, so I would look for a nearer term price targets for me, if we're able to get just sort of like the technical analysis kind of underway and get some headroom there, working ourselves back up the chart. I would love to see something like the gap fill here. So I would have sort of two price targets to the upside. One would be to come up and fill this gap that you see here. Now this is on the daily, so it's not where we started, but that's okay. So I would go here, 1661. And again, this is not squeeze. This is just the chart fundamentals. And then, I would have a target just before that, right around 13.25. So those are my two upper price targets in the moment. Now, obviously, it could fly far beyond that, but again, I think that these being the price targets for the near future, just based on again being able to claw back price levels, supply and demand zones, fib retracement levels, that it's already sort of like had to fall through in order to claw itself back. And then again, if it falls to the downside, I would look for it to settle, build itself a floor somewhere around 708 to the downside. So to me, it would look potentially like a really good buy. If it was looking like something that I wanted to buy, right around that 710, 708 area. And then, if it does start to get some nice upward momentum, I would go ahead and look for, some sort of like trimming, profit taking around 1325, 1661, unless it seems like we're getting a short squeeze kicked off, which, if it does move up there relatively quickly, that could certainly set those things off. There's going to be a lot sort of like at play here. Now, looking at the short data, and then we'll set sort of like a price target for it if we can get a short squeeze going. Let's pop over here. There's a couple of things that I would like to look at. So one would be, I guess this is kind of relevant in terms of like squeeze potential. So this is coming in with December 17th, $9 strikes. There was a sweep of calls that came through to the tune of 228 contracts where open interest is only 764. So a really high percentage of the overall open interest in just one sweep. So this is obviously came through as a bullish sentiment. So sitting basically, I think around at the money. Yeah, it's close enough to, at the money. It will say here actually. After the option alert, the stock price moved down to $9. So yeah, that's right at the money. And so obviously because these are a little bit longer dated, but at this point, being that we're in July, this isn't that crazy far dated. But the volume, I think, is what triggered this as being considered unusual. So obviously somebody's making a big bet that the stock price will move up significantly enough to make it worth the premium that they're paying, plus some nice return. Obviously, the alternate side of that is this could be some sort of hedge activity based on them also being short, leveraged short to a certain degree and wanting to offset that. So keep in mind the potential for like option influence in this, not obviously as part of a short squeeze, but as part of a gamma squeeze that could be set off by a short squeeze first being triggered. And I think that's probably, in the case of Clover, the sort of cadence in which things would happen. Now, on the short interest side of things, let's pop Ortex open here and take a look. So you see here, let's go over here. So short interest had come down quite a bit today based on their estimate, but still the current short interest as a percentage of the free float, 26.52. And again, historically speaking, if you're just not that familiar, 10% or more is considered high, a high short interest as a percentage of the float. Anything over 20 was really like, whoa, things are really, really outsized here. So the fact that this came down 16%, and still is sitting at 26. So this tells us that prior to this, this was sitting in the 40s, which is just an enormously high percent. You see here, I think this is the last reported, exchange reported short interest. So 48.08 percentage of the free float on a loan. Here's the other big key, the utilization being really high at the moment, 98.57, which, if you're not familiar, 100% utilization means that all shares available to borrow or lend at a lending program have in fact been lent. So you have to watch for times when the utilization gets close to 100, because that can incentivize short sellers poorly to naked short sell or sell phantom shares into the market because they can't get one to loan, but yet they want to actively short the stock, and so they sell a share that doesn't exist. So that would then come through later in the fails to deliver data, because if they're selling you something that doesn't exist, they don't have any way to provide it to you, then becomes a fail to deliver, and then that has to be dealt with over the course of the next 30 days, or is likely to be dealt with over the course of the next 30 days. So short interest, although this is a reasonably high bump down, decrease day to day, it still is incredibly high, just sort of like historically speaking. So there still is much, much more to be done here. Now, that said, if the shorts start to back off a bit, that is another way in which sort of like removing that artificial selling pressure could help CLOV start to recover and build back some of the share price. We look at the short volume here, pretty high short volume a couple of days over the last few trading weeks, 15 million, 19 million. Now that was when the overall volume was getting bumped up quite a bit. I did have a commenter sort of like very savvily comment that there could be some manipulation going on whereby and I don't think that they were talking about CLOV in particular. I think it was just as a general concept, but where short sellers drive up the overall volume that is happening on any given day to sort of like hide how high the short volume is. So, it producing like something in the 20s versus like if they wanted to have a super heavy short volume on a given day, and they didn't like triple the total volume as compared to previous days, that would have stood out as being like 50-60 ratio as opposed to 25. So something to definitely keep an eye on there, but sort of like a smart observation on their part, I would say. The fails to deliver that I had mentioned, those are housed down here. These are reported twice a month. So the first half of June is what we have right now. So you're looking at the last half of May and the first half of June. We should have the second half of June numbers soon, but you see here on certain days over 1 million shares being failed to deliver. So that's where you see potentially naked short sellers dumping shares onto the open markets that then have to get rectified later on. Now, if we look at the data from yesterday to today, now I know that Ortex is reporting this, big decrease. What we see here actually at least from the feed from Interactive Brokers, which is where this comes from, on 7/12, which was yesterday, yes, we closed out the day with 3.7 million shares available to borrow, and, a fee that's, getting higher. It would be great to see this at 60% or more, but, it's something, at least in the double digits. But then 2 million immediately come out, again, just from one broker dealer, immediately at open this morning, and then continues to trickle down. There's a small position close, about 500,000, and then some additional closing that comes in, and then sort of like pretty low numbers. But overall, looking like today we might close with about 1.5 million more shares lent out than were returned, again, just from one broker. So it'll be interesting to see if this daily estimate pops back up tomorrow, or what may have happened throughout the day today. Now, being that the short interest is so high, that this is an estimate and this is exchange reported, and that the utilization is so high, if there were to be a legitimate short squeeze that could be kicked off, first of all, I want to preface this with, keep in mind, these are sort of like unicorn events. There's many more ways for a short squeeze to fail, or for the shorts to be able to get out without getting squeezed, than there are for a short squeeze to actually effectively happen or effectively take place. So that said, if the stars can align and that can actually happen, I would put the price of CLOV shooting up, somewhere right now we're hovering just below $9. I would look for something around the $40 mark, $35-$40 mark. If we were to truly kick off a short squeeze, the magnitude to which, there is a super high percent of the float being shorted currently. But again, there's all of the possibility in the world that shorts could get out of these positions without getting squeezed. Because again, there's, manipulation is manipulation for a reason. And, there's a lot of side doors to try to escape out of. Okay, so that's where I'm standing for just the chart alone. Now let's do a quick look at the business and competitors and sort of talk about where I could see CLOV going as sort of like a longer term play, not necessarily based on the chart, but based on competition and where things have gone relatively recently. This is what I want, the year to date. Okay, let's scroll back here. I just want to set ourselves up for success here. Okay, so let me preface this also by saying, I previously had spun up a health tech or like a med tech accelerator program. So I'm relatively familiar with the space. I also was a very early employee at an insurtech company. It's probably a better term, insurtech, for these types of companies. And so, again, I'm familiar with the space and sort of like what often goes on in these sort of situations. But let's talk about a couple of competitors to CLOV and sort of where they sit. Now, CLOV itself has a market cap, and that's what I'm going to base this sort of like price target on. Market cap of 3.64 billion, where it currently sits. Okay. And then if we look at Bright Health, which Bright Health really new on the scene, so we can sort of chill this chart out a little bit, but IPO'd not too long ago. Now, Bright Health is building a national integrated system of care with care partners, has two reportable segments. These segments here: personalized care delivery in multiple ways, including integrated care, Bright Health Network, yada, yada, yada. You can read their, Wikipedia profile or whatever to get more details if you'd like. But Bright Health, again, being pretty new onto the public markets, right now has a market cap of 10 billion. Okay, so about 2.5, 3x what we see with CLOV. And then the other one here is Alignment Healthcare. Now, Alignment is a platform for seniors. The company offers its healthcare platform through its Medicare and Advantage plan offerings, tailored to take its account factors such as health condition, ranging from plans for healthy members to chronic special need plans. So basically, in the insurtech space, and I guess we didn't do this for CLOV, but specifically focus on, plans to seniors. That's also the space in which CLOV sits. So Alignment, their market cap much closer to CLOV's at 3.97 billion. So if you look at sort of the two competitors, Alignment makes it look like, okay, maybe CLOV is very, very close to fairly priced currently, whereas Bright Health, if they are closer, competitively speaking, to them, and their accomplishments and earnings and growth and things like that being much more in tune or aligned to, then, we would look for them to be somewhere in the range of like 2.5 to 3x the share price of where they currently are, which would put them around $17, $18, $21, $25, something like that. So, again, a big range, because 2.5, 3 times, somewhere around there. But obviously, a few factors to look at. So I have here a couple of things. So one, CLOV initially had this big beatdown because of this short seller report, and that is the big drop that we see in CLOV that happened February 4th, I believe that it was. I had set the chart up for success, like I said, and then I boofed it. So the 3rd to the 4th, you see this big fall off, and then like a slight claw back, and then a huge sell off down into the 6s. But this is where this Hindenburg short seller report hit. And this is it. You see it here, February 4th, 2021. We won't get too far into it, but just to say, they make a ton of claims. You see all of these bullet points here. One of them is that, CLOV failed to report that they're under investigation by the Department of Justice. You see right here. And so a bunch of these very concerning on the face of it, sort of bullet points that Hindenburg put out, obviously shook the retail market. Now, Clover Health responded the next day, and they obviously say that a lot of this is overblown and misrepresented. 13 questions. Clover concluded that the DOJ matter was not material and was not required to be specifically disclosed. Clover has conducted a detailed review of matters potentially addressed by the DOJ request for information, has concluded that it is in compliance with all laws and regulations material to its business. So, they basically came out pretty heavy in their refutation of what Hindenburg had put out in a pretty lengthy address to the market. But obviously, if we look at sort of like a battle of wills, Hindenburg sort of got the best of this one. But that said, CLOV obviously continuing to struggle a bit, even though it's trying to get some movements, and obviously has been under short seller attack strongly since the time that the report came out. So, based on this, I would sort of look at kind of like a midpoint price for CLOV, meaning, not quite the 10 billion where we see Bright Health at, and not quite the 4 billion, or much closer to where we see alignments. So for a longer term area, which I guess I will put in a different color, but it's going to actually be relatively in alignment to where we have this right now. I would go somewhere in about the 7 billion market cap range. Just based on sort of a bunch of the challenges that CLOV has seen. Sometimes when SPAC companies come to markets, they are potentially a bit premature in terms of having everything buttoned up that a company that's going more, I want to say organically, but that's not the right word, but it's going more traditionally, the IPO routes might be a bit more buttoned up than something that's coming online via SPAC. But again, I don't even know if that's the case in CLOV's situation. But if we say that CLOV is going to go about 2x its current price, then we'll put it here just shy of about 18. So we say somewhere around this 1788 zone would be sort of the kind of fair value target that I would be putting on this for the time being. We'll toss that in the green. But these are the targets that I would have. 708, to me, it would be a really good deal down there on the lower sort of price floor price zone. And then again, just based on the trend in the chart, 1325, 1661 seem like really good areas for nearer term trading, in my opinion, if it can get sort of a bounce going. And then longer term, I'd look for this to be trading around the $18 mark as sort of a bunch of this dust settles. And that said, this has been obviously several months since that Hindenburg report came out, and I myself, I thought that this would be cleared up much, much faster. I thought that the recovery would be much, much quicker. But I think also a lot of additional things piled on. Growth stocks on the whole started to get hammered really, really hard. If you remember February and March, and that lasted for several months, and even to today, whenever there's sort of a side glance in the market, growth is getting hit the hardest by far. And then there also sort of ended up to be this pile on to SPACs, where SPACs started to be seen as this sort of really not legit kind of thing, and the companies that were coming on board via SPACs were really not great fits for publicly traded companies yet, at least, and so the degree to which those factors have played in to help keep CLOV's price down and help keep short sellers really, really heavy in this one, has been pretty significant. So that's what I would look for. But again, we do have a higher price target, or I would consider a higher price target for a potential short squeeze, obviously, because of the ramifications that would have, being that the interest is so high as a percentage of the free float. All right, well, this has been a beast of a video, but hopefully it gave you some ideas to consider as you do your own due diligence and come up with your own trading plan and formulate your own opinions and any price targets or entry or exit points that you may have for yourself with CLOV. It's definitely a volatile one for now, which always, of course, makes it interesting. All right, that'll do it for this video. I appreciate you watching, and I will see you in the next video.